Hi, everyone. This is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. As you can see, I'm still in the mountains, and that's because when you take a city boy with a two-wheel drive truck into the mountains, that two-wheel drive truck gets stuck on the side of the mountain in the mud, and you have to have help come take you out, pull it out. So that's what happened last night. So wasn't able to head back to the dragon capsule yet. So for those of you that are new, welcome, and long-winded, interesting intro. But the way TradeFinder works, first of all, if you've seen any of our videos, you've undoubtedly seen this disclosure. If you're not, if you're brand new, and this is the first video you've seen, we show this each and every time. This is a requirement. It is important. We highlight a couple things that the powers that be want us to make you aware of, and that's number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. Other than that, if it is the first time seeing it, please take a screenshot of it and read it in detail in your leisure. Now, the way TradeFinder works is run through, we'll do a little bit of a market update, which we'll start with. And from there, we'll take a look at any closed alerts that we may have had for our subscribers so you get an idea of how our alert service works at Elliott Wave Options. The website is ewotrader.com if you haven't visited it. Then we'll go through and look at updating our past case study considerations, which is what we do each week with TradeFinder as we go through and search towards the end, see if we can find a case study to monitor for the following next few weeks. So we'll update those. Then we'll go through and look to see if we can find one to follow along with for tonight. And at the end, with any time that's remaining, we'll open it up for general questions, which usually amounts to you guys giving us your favorite stock symbol and we looking at what our indicators say about your symbol, understanding we are not giving individual investment advice. We're simply saying, here's what our charts show regarding your symbol. And that's the process. That's how things work. So without further ado, let's go ahead and get into the market.
Good to go now.
Okay, so I'll just backtrack here for a second. Okay, one thing to note at looking at the market here is a little bit of a triangle formation. And at Elliott Wave Options, we certainly look at our share of triangles, even noting that Elliott says, hey, don't always just take a look at the big triangles, pay attention to the smaller ones as well. And that's what I would view this one as, a bit of a smaller triangle. Now, the interesting thing is it's not super well formed. There's not that many lower highs. There's only one basically high or low that's in the actual formation there. You could count on that lower trend line, but there is indeed a doji that occurred with today's close, which could mean a lot moving into tomorrow's trade. Now, looking at the moving averages, it was very important for the market to move back to the upside on Friday. So it made a big move higher. Note that there was a reversal day on Thursday. So I want to talk about the follow through. So we had a big reversal day on Thursday, follow through on Friday, good move to the upside. Now, Monday would have been nice to see an attack on the most recent highs. That didn't happen, but as I made a note to our subscribers, we do an insider's call for our subscribers each and every week on Thursdays. However, in between the subscriber call, that one's a live Q&A, I can post written messages that sent out to all the subscribers as well. And so that's what I mean when I said send a note to our subscribers of the fact that although yesterday wasn't a big up day, wasn't a fantastic follow through day, we didn't attack the recent highs, but it was constructive. And the reason it was constructive is because we opened, came down, tapped the 10-day moving average on the low, moved back to the upside, and closed near the high of the day. So with those things considered, that was a pretty decent day. Now, what would have been nice is to see today's high at least try to hit that most recent high back from the 17th of March. But you can see what we had was, in fact, an inside day and a doji. Two different things telling us that something's probably getting ready to happen in the markets tomorrow. An inside day, if you're not familiar with what that means, you can see that the high of today's bar is lower than the high from yesterday, and the low from today's bar is just slightly higher than the low of yesterday's, meaning that the entire bar from today was encompassed within the high and low prices from yesterday. And so with an inside bar and a doji, the market's trying to figure out where we go from here. And it certainly would be nice to see a move up towards that recent high and breaking above that to 400. As we noted last week, we do have this new qualified zigzag pattern right here. And there's the 61.8% target, and then up around 410. There is the 100% extension, which is what we're looking for out of this completion of the zigzag. Now that brings us, we have 410, we have 420, we've got another pattern that gives us 426. We have multiple patterns that are giving us above a 400 reading on the SPY. Just be nice to see the market actually make a more sustained directional move. That would create volatility back into long options, the call options specifically, and have us propelled back towards that new high. Now, I think what will happen is if we are able to move above, because you can see that there are some shorts, right? We're not devoid of those. And we also understand that we are in an extended C wave of that big zigzag that I was showing for months, basically, that had the 381 target. That was the 100% extension. Now we're in the extension to move to 161.8, which is the 420 level. So all of those things are set up as well. And so we have to remember that that's an extended level. But what we'd like to see is some more volatility come in and propel us higher. So the shorts have made a little bit of a stand here at that level from the 17th of March. Moved down, a doji there, bounced up, fell back down, basically just tested the 50-day moving average. Now we're back above the 10-day moving average with something likely to occur in the markets tomorrow. If we are able to break above that high, my opinion is, and that's all it is opinion. I've shown you all the technical charts, you know, the different levels, 410, 420, and 426 with the different Elliott Wave patterns. My opinion is that would force the shorts that have tried to step in here and cover. That gives us that volatility movement that we're looking for to reach those C wave targets. There's no doubt, there's no question that there are shorts that have set that pivot point where the wave 5 is as their high. And so if the market can break through that, those shorts cover, and then off we go to the upside. Quite often, impulse moves are initiated by short covering. Well, we know we're already in a C wave impulse, at least a qualified zigzag, so it isn't getting started, pardon me, in this case, with short covering. It would just be further propelled by short covering. So that's the scenario. As far as the market, not a whole lot more can be said about it. With a little bit of a triangle, but an inside day, a doji right on top of the 10-day moving average, just underneath most recent highs. Yeah, we're setting up for something to happen. I feel very certain about that in the market. But anytime you're, again, just to reiterate one more time, anytime you're in an extended level, the fact that zigzag's already hit its target and you're in an extended level, you count on your confirming indicators to give you guidance, and they're just not. So right now they're saying that the ADX is not interested. We had come to this level here that we highlighted last week to where that was the previous low on the ADX, and it was curling back to the upside, and then we had the big move up on Friday last week, but then we've broken below it now, meaning that coincides with the formation of that triangle, the fact that it's non-directional at the moment. So all those things will come to convergence, I think, tomorrow, and we'll know more with what occurs in tomorrow's trade. So the grind still continues, and that's about it. So with that said, I will move back to, I want to make sure you can see this chart. This is our website. Everybody see that okay? Just let me know if you can't. If you can see it okay, I'm just going to continue on. So this is our website. For those of you that may not have been there before, ewotrader.com, and we have a trade list. So it's right under here under the trades button. And since we didn't close out a position this week, other than one that was what we call a lottery ticket trade, so I won't talk too much about that one. Highlight this with this Viacom. Now, the reason I wanted to highlight this one is one of the things that you've heard me saying. If you've heard me talk about anything in videos, you've heard this phrase, and a lot of people have mentioned it in the past. No security in any time frame is very far away from its 10-day moving average. Surely you've heard me say that in the past. And if you're not familiar with what occurred with Viacom, I'll bring you back and show you the chart while I'm telling you what happened. A hedge fund blew up, and it was a hedge fund that was not buying stocks in the traditional manner. They were doing it through these things called swaps. So it's kind of a private trading thing, and by doing it that way, they don't have to report their transactions to the SEC. So it's, you know, it's not backdoor, underhanded, or anything along those lines. It's just a little bit more of a private way of acquiring stock, and it can be done with higher leverage because it's technically not regulated the way they do it. They don't have to follow the normal margin rules. Well, when you don't have to follow, I mean, you know, leverage is always a two-way street. Leverage works well when it's in your favor, and it can be really bad when it works against you. In this case, for this hedge fund that blew up, it was really bad. It was a multi-billion-dollar family trading office, which means it was basically a private hedge fund. So it was a family office rather than a mutual fund, whatever, typical hedge fund. And they were doing some, I mean, for the amount of money they had, the billions of dollars that they had in the fund, they were doing some awfully risky things. And it makes you wonder, people that are in control of that kind of money, taking that kind of risk, it just makes you shake your head. It really does. It's like, you know, it's just hard to fathom, honestly. Well, it blew up. So Viacom came out, said they were going to do I think it was $3 million stock offering. Might have been $3 billion, but they were doing a secondary offering, and it didn't go well. And so when it didn't go well, that caused the stock to start going down. Well, with this, it's already, right, a secondary offering is already going to dilute the shares, and it's going to dilute the outstanding shares. So that's never a great thing if you're long a stock. But the fact that it didn't go well was even more surprising. And so that created pressure on all these highly leveraged positions that the hedge fund had, and they got called. So they had a margin call, which basically caused them to have to liquidate the entire fund. There's some big banks, Credit Suisse, and some other banks that had been involved with the leverage along with this hedge fund. They've already said that they're going to have substantial losses because of it. Other banks, I think Goldman Sachs has said that they really shouldn't see anything. I don't think JP Morgan is either, but there's some big institutions. Credit Suisse is a big, huge financial institution that's going to have to report significant losses due to this. So that's the backstory of Viacom. So that has nothing to do with Elliott Wave, does it? I mean, you can see there's an Elliott Wave pattern here. The wave 4 is 68%. But there's that. And my subscribers, if you're not a subscriber, you may not have heard me say this, but our subscribers hear me say it all the time. I really like these 45-degree angle moves. I don't like it when things go vertical, because what goes straight up comes straight back down. And you just see examples of it over and over and over again. And there you go. There's about as an extreme of an example of it going straight down as you can get. So this is a speculative position based on that 10-day moving average rule. No security in any time frame is very far away from the 10-day moving average. Well, look how far away the stock was from the 10-day moving average yesterday. So even after these massive moves to the downside, and remember now, this is not people wanting to sell. This is not, oh, let's run for the hills. The business model is destroyed. All of a sudden, CBS, is not making money anymore. It wasn't any of those things. This was an unusual event where this hedge fund had to have these highly leveraged trades unwound, and it smashed the stock in doing so. So the general business model hasn't changed. One could argue that it should have never gone that vertical in the first place. But anyway, we're all the way back down here from the high levels that it had. We're right down here at some pretty good support, right from November and December of last year before things went a little too crazy to the upside. So we're sitting on support. We still have a viable Elliott Wave pattern, but that's not the typical wave 4 pattern that you see. So that has to be discounted as well. But look at the separation from where the 10-day moving average is. And there's a gap here that will likely get filled at some point in time. So we hit $100, which is one of those round number things I talk about, the Star Trek tractor beam effect that draws stocks to those round numbers. Then this vertical move to the downside, and then here we sit. And so here's what happened in today's trade, and there's a doji. So something's getting ready to happen in this tomorrow as well. And it didn't make a big bounce. Looked like early that it was going to move. It did trade to the upside, $1.60. So a little bit of a move higher, but not that much, 3.5%. But there's a significant bounce possible, about $20 worth to get back to that 10-day moving average. And it'll be interesting to see with that doji today if that means that, all right, we've settled down. We've gotten rid of the craziness that was going on with the mass selling, the forced liquidation selling. And by the way, when you have a big down day like this, that's not the day to do something like this. Way too much volatility in the options. You got to let it calm down. And so that's why the next day, okay, everything's settled down, start to pull that volatility back out of the premiums. Now this is something that if you want to try to make a short-term trade out of, you can. So it's not necessarily a longer-term trading pattern as far as an Elliott Wave pattern or a Zig Zag. It's just simply no security in any time frame, gets very far away from its 10-day moving average. Now the stock could just sit there and let the 10-day moving average come down. If it does, we'll get out. Normally what will happen in something this vertical, there'll be some sort of a little bit of a bounce. It may not be super significant. It may not be 20 points, but usually you get 5 or 10 points out of something like this. A nice bounce, so you have a nice little short-term trade, and you take that and you move on, and you're not waiting for anything to come back, fill that gap, or get back to the most recent highs. That's the plan behind it. So I thought that was something to highlight and share with you, since it is slightly different than what our norm is here. So it's slightly different from the general zigzag patterns, but it still follows along with that 10-day moving average rule, which a lot of our subscribers would say that is something that they've put to use in their own trading, as well as with our alerts. So that's Viacom. Interesting. You can follow along with it. You'll see what happens over the next couple of trading days. I think the risk is pretty minimal to the downside from where we are. Whether or not it bounces up, that's a different story. It might not. It might just go dead sideways, and that's okay too. But there's a very good chance that we get some sort of a rebound bounce. All right, so let's go and look at some of our previous case studies. The first one is Werner, going back to March 2nd. So these are case study considerations that were identified in previous TradeFinders for those of you that may be new with us. So this was March 2nd. This is what it looked like. And then here we are today. So if we go back, March 2nd, we closed at 44.76. And today we closed at 48.04. So almost $4 higher. So about a 10% move to the upside there. Still in the wave 3. Let's take a look at the DMI. The two directional indicators had come together on this little bit of a pullback here, but they've since gone back the other way. positive directional indicator in the lead, ADX curling back to the upside. There could be more to go to the upside here, but you have to make that determination as far as when you might want to consider taking a gain and moving out of that one. The next one was Royal Gold, which we identified on the 9th of March, so the following week. And here's what that pattern looked like. So this was a strangle, expecting a breakout. Talked about this in ad nauseum on the price of gold. When is gold going to move? It's unbelievable for even people that have followed gold for a very long time, what's going on or lack thereof with gold. And you can see Royal Gold hasn't done anything either. Now, Royal Gold usually moves really well with the price of gold. So if gold could get its act together and make some sort of a move, again, this is a strangle, so we don't care whether it's up or down, then Royal Gold tends to give you, it's almost like a leveraged instrument. It gives you a better percentage return out of the movement than just simply the metal itself. But so far, nothing's happened there. So that one's still the same. The following week, on the 16th, we looked at AOS. So here was AOS, and that was closed at 65.63. And then you can see we are up at 69.17, hitting actually as high as 70.13 in yesterday's trade on the high. Something you might want to consider here is there's that separation from the 10-day moving average again. So this one's getting a bit overbought. And so at this point in time, one might want to consider taking some profits here as well. Again, not giving you investment advice if you're following along with these, what to do. Just saying that there's a gap there that hasn't been filled. We're getting a bit vertical. You can see that yesterday, if we walk this back one more day, you can see that there's even greater separation yesterday. And then we add in today, and you can see it was just a sideways move. Now, that would be positive for the stock potentially moving higher if it just consolidates here and lets the 10-day moving average catch up. We look at the DMI, and the ADX has not really reacted a whole lot with the move. It was quick to react, which is unusual for the ADX on this little bit of a pullback here. Usually it takes a bit longer than that for the ADX to move, but it reacted to that quickly, but it's also turned back around quickly. So when you look at it right now, it looks potentially okay to move higher. But again, at some point, you got to decide when you want to go ahead and take your gains and move on. Also, on that same day, we did PSA, which was public storage. So also on the 16th, had a little bit of a pullback, but now it's turned around and gone back to the upside. So back on the 16th, we were trading at 245, and today we are at 247. So this one's actually recovered the initial move against the direction that we were looking for, and has now moved higher than where it was when we looked at it on the entry. And take a look at that DMI, the way that's forming. It looks like this may really want to run. That's a really early looking, hasn't quite broken above 20 yet, but that looks awfully good. But it did look good before we had this little pullback too, didn't it? So, I mean, it looked really good back then, but now it's setting up again for a second run. So it could be big things ahead for PSA. Then last week, we looked at SFM. And so I remember talking about if you're a believer in healthy food, Sprouts Farmers Market, SFM, the symbol. Here's where we were. Pretty decent day when we looked at it, but take a look at that. Now here we go, vertical again, which, as you know, is not something I'm a big fan of. We also have the ADX hitting 40 now, and the positive directional indicator has broken below it just a touch, which means that the strongest part of the move, at least for the wave 3, is likely over. Now remember, and I mentioned this over and over again, when the DMI shows that the strongest part of the move is over, it doesn't mean the entire move is over. It means the strongest part of the move is over. So we could still drift higher from here, but when you're vertical like this, that makes you even a little bit more wary of yeah, we could actually pull back here a bit. There's the 10-day moving average. And so you can see there's still separation there. And maybe we might want to consider taking some gains there as well. Or you could say, all right, well, we open lower, we traded lower, and we close higher on the day. So maybe we hang in there and see what happens with the DMI. But I think that's a touch greedy on this one. It's made a nice move for a $25 stock, and it's gone vertical. It's overbought short term. You would, I mean, if you wanted to have a long-term view of this and be patient, that would be a different story. But if you're looking for a shorter term trade, might be time to go ahead and take that one and move on. DraftKings, we looked at this. This was a strangle setup and pretty decent breakout to the downside there. 10-point move already down on DraftKings. Bit of a surprise to me, but maybe because Super Bowl's over, Final Four is about to occur, so March Madness is coming to an end. Not a whole heck of a lot of big sporting events to come after that. I mean, obviously there's year-round sports, but a couple of the biggies, the Super Bowl, March Madness coming to an end. Could be that people are losing interest in the stock, which is what made it interesting for us. So $10 move to the downside is pretty good in a week on a $70 stock. And then check this out. Last but not least, Google. And here's where we were, and here's where we are. It's done nothing, absolutely nothing. And look at that ADX. Now, this is one that's should be making you, if you're a fan of our strangle scenario at all, you should be licking your chops at this one. What's the negative? It's a $2,000 stock. So for us, that goes into the high value portfolio, which is for those with bit larger accounts that can handle a little bit more than our $500 of risk. But as far as the pattern, now you could draw it a couple of different ways to see. And one of our subscribers actually sent in a message and said, is this the launch pad effect? Now that's another kind of thing that, along with the 10-day moving average rule that I've noticed over time. I live on the Space Coast in Florida, so that's where the connotation launch pad came from. When a stock goes and consolidates sideways, very similar to what happened back here. So when it consolidates sideways like that, now the launch pad is usually less volatile bars than this. So they're not the big bars. Usually there's a whole bunch of little bars. So it's like the launch pad, and then boom, you get the blast off. And so here was a sideways consolidation. Boom, it broke up. It didn't hold though. And then consolidated again. Boom, broke out again. And now we're going through an extended consolidation. This time, my preference would have been a little less intraday volatility, but again, we're dealing with a $2,000 stock. So do you draw your triangle this way, connecting that bottom low from when we gapped up? You could certainly make a case for that triangle, or you could make a case for a descending triangle as well, where we have these same lows with the lower highs. And I tend to like multiple touches of the line, of the trend line. So I like this ascending triangle look here. So the multiple touches are right there. And it doesn't matter which of the two triangle scenarios or patterns you prefer. It's really good. It's a really good setup on Google. And with that incredibly low DMI, ADX, something really big could be coming out of Google. Now, it doesn't necessarily mean there's going to be an upward breakout, right? I mean, there is a lot of chatter on the financial networks that for big tech, there's a lot of good value. Big tech got hit, and so some of those overvalued prices are not overvalued anymore, and there's a lot of interest in them. And the most attractive of them, according to some of those on the financial networks, is Google. So they didn't get hit. They're just undervalued. They just kind of consolidated. So there's you know, the big tech is a place that a lot of money is looking at. If we're going to get this continuation here, if we're going to get this move back to the upside with the completion of those multiple zigzag patterns that are at 400 and above on the SPY. So we'll see. But that gives you a rundown of our past case study considerations. As you can see, pretty good slate there. And our past history of case study considerations in TradeFinder has been pretty darn impressive for those of you that may have been following us for months and months. You undoubtedly know. They're all recorded. They're all on YouTube. You can go back and look at them ahead of time. So, you know, there's no Monday morning quarterbacking going on of, you know, past case studies, back testing, that kind of thing. These are all identified live at previous TradeFinders, just exactly like this. So let's take a look and see what may be in store for us for tonight. I haven't looked at these. I talk about this a lot. I think this is really important. It's a big deal with me that I don't pre-look at these when we're doing these events and trying to do the analysis to where you get at least a feel for the way that I look at things. So I have not looked at these ahead of time at all. So let's go through and look on the left-hand side. Again, for those of you that may be new, this program is called ProfitSource. I've looked at every Elliott Wave software program that I'm aware exists. So I don't like to say I've looked at them all because there may be some that I'm not aware of, but I've looked at all of the ones that I know exist. This is my favorite. Charts are clean, get a lot of flexibility, can create your own searches, create your own combination. You can do your own back testing, test your systems, etc. That's how I came up with my system, is just hundreds of hours literally of back testing, fooling around with different indicators, different settings, etc. And then over here, you can see these are pre-computed searches. So these, you don't have to actually run the search. It's already run for you. So the results are there ready for you. Here's some Elliott Wave searches. One of the new things, which is really cool, is the Wave 3 bearish and Wave 3 bullish. I'm a big believer in trading the Wave 3. Not everybody that teaches Elliott Wave feels the same way. Some say, wait, just trade the Wave 5. Pretty widely accepted that the Wave 3 is the strongest wave, so I don't see why not trade it? If it's the strongest one, let's trade it, especially when you can find a zigzag in it. That helps, because the negative is you don't really know when that Wave 3 is going to end. Well, even in that scenario, forgetting the fact that finding a zigzag gives you a better idea of the target, look over here, you can find when they became labeled as a Wave 3 on the very first day. Now that's cool, and that's recent. So if you wanted to get in earlier on the Wave 3 rather than a more mature one and trying to figure out when's it going to end, if it doesn't have a zigzag pattern, and if it does, we're going to look at Wave 3 zigzags and this week's zigzag mastery class. So I'm pretty excited about that. But without one, there you can get in earlier in the Wave 3. And then there's your more traditional Elliott Wave searches. And then these under Elliott Wave options are some that Hub, the creator of ProfitSource, kindly put in for our Elliott Wave option subscribers. So our Elliott Wave option subscribers that also have ProfitSource get the advantage of having these pre-computed searches, which are basically my search parameters that I've come up with some additions, like just the ADX moving up. So just simply means that that doesn't tell you whether it's a uptrend or a downtrend, does it? Because the ADX moving up just tells you the trend is gaining strength. But if it's an uptrend, the ADX is moving up. If it's a downtrend, the ADX is moving up. So you can find uptrends or downtrends with that search. Then there's the bearish Wave 3 and Wave 5, or excuse me, bullish and bearish Wave 3s. My search is there. And then you can also filter in the directional indicators along with the ADX if you'd like to as well. Well, since, at least for now, the market still is in that qualified upward zigzag, let's look for upwards first. Now, you can see, and this should be interesting because this is reversed. Before, there were a lot more bearish wave threes than there were bullish. So if you're bullish on the market moving forward, that's reversed. That's a positive sign, especially when we just have that newly formed zigzag or newly confirmed zigzag. So qualified is the word I was looking for. So let's look at bullish wave three, and then we can add these other things in there too, because 242 is too many. We don't have much time to look at those. So let's further filter it down. So let's have the ADX moving up. Let's have the positive directional indicator be above the negative. And boy, that's still a big old list. So before we do that, let's go take a look at the one. So there's one that came under my bullish impulse search. Let's look at that one before we pick out some other ones. It's ESCO Technologies, symbol ESE. All you have to do is click on it from the search result, and it brings you up the chart. There's all the indicators. So we take all this stuff off so we can take a better look at the chart. I will add the Elliott Wave on, and you can see that bounced down from a wave 5 target right at the 62% fib level, so that makes sense. So it pulled back, but it did find support there at 105. You can see going back here, that was an area of support which held. Nice doji here, and we reversed back to the upside. Look at the moving averages. You can see that we're breaking above the 10-day moving average, so that part looks good. And the DMI, be nicer. One negative is certainly the fact that we had an update today, finished 2% to the upside, and yet the positive directional indicator is coming down. So it would have been a lot nicer to see that. It's one thing for the ADX because we know that's slower. It takes longer to move. Not quite as long as that ship in the Suez Canal, but I usually use the analogy of it's like turning an ocean liner. The ADX is a touch more lagging. But the two directional indicators are very responsive. They respond almost immediately on the same day. And so to have an up day and the positive directional indicator lower, it's not super comforting on that search. So with that one, we'll go back and look at the other searches and see if there's something else that might be a little bit better. Could have a touch of a zigzag there. I don't really like these big spikes up either. When you have these kind of blow off tops like that. It is a qualified zigzag with a 60% corrective level, so up to 61.8 and potentially up to 100. It's not my favorite, and I would probably prefer to see that high there, the previous three, broken and confirmed, because note that we traded above it and closed above it back on the 19th, and then that's when we got that weird spike bar where we sold off and came back down. Now we're trying again. So I would want to see a close above that 112 level that gets confirmed before we enter this one. There's plenty of room up to 123. So I don't think that's the best that we can do. I think we can find something else. So let's come back to the other search where we had the positive directional indicator, bullish wave 3, ADX turning up, all those things working well. There are 5 in the momentum scan if we want to take a look at some of the lower dollar stocks. Well, let's see if there's anything in here that looks attractive. A few financials in there, Home Depot, Illinois Tool, Fluor Systems, General Dynamics. That's interesting. Let's try Home Depot. Wow, look at that climb. That's accumulation when you see that, where we're continuing to go higher. That means that institutions are accumulating the shares. There's not a lot of wild intraday volatility. but that movement in that 45-degree angle, there should be steady volume. So there's no, there is one volume spike there, but normally when a stock is under accumulation by institutions, there's no big volume spikes. And that's because they do that on purpose. They don't want to draw attention to what's going on. So they just slowly accumulate the stock, and they make sure that they do it on steady, above average volume, but not the volume spikes that set off all the program traders and, you know, all those things looking for unusual activity. And then they just want to stay under the radar, accumulate their shares, and then, you know, usually after that, that's when all the upgrades come and all. And so that's what they use to sell into when us, the retail public, comes in after they've already acquired their shares. So all that makes sense. Taking a look at the DMI, you can see that the ADX has not quite reached 40 yet, but we have taken a little break there over the last couple of days. Looking at the moving averages, there you go. There's why, because we'd gotten above that 10-day moving average. So we just took a little bit of a break, closed that gap with the 10-day moving average. We're starting to get a tiny bit overbought there. So we've had a couple sideways days to catch that back up. And then we'll see, based on the ADX and the positive directional indicator, if it regathers itself and wants to continue higher. The concern there is that, man, some part of that move may be over. We're also at another one of those primary price targets, the ones that draw the price there at 300. So that's a little bit of an issue. Let's go back and see if we can find something else to make a note of for this week. Arch Capital. Jacobs Engineering, Estee Lauder, Double Line Income, bonds. Let's try Fluor. Some government stuff seems to be moving, and the government is, that must have been bought out. Maybe not, but that's about as sideways as something you could ever expect to see. That's not the kind of pattern that we're looking for. Usually when they flatline, they were bought out. Maybe that hasn't happened. Maybe it's just literally going that sideways. Expeditors. Oh, and the ADX is above 40 there as well. You see that? So just looks like too much of that move is over with. Go ahead and take a look at Arch Capital. Not quite a zigzag there, I don't think. I don't think that was enough of a correction right there to qualify. Not really. Now the ADX has room to run here, but it's above the positive directional indicator, which is not what you want. You want to see that positive directional indicator on top of the ADX, and we don't have that. So that's not exactly what we're looking for here. And we've got a doji, but hammered doji, maybe that means that we're getting ready to take off on another run. Look at the 10-day moving average. It's not that much overbought. And if the positive directional indicator was above the ADX, that would look pretty good. Let's see what else we can find. Let's go over here and look at the momentum scan. So that looks for stuff that's lower dollar, but still based by good solid technicals. So we uncheck these other boxes, and there's a few to look at. Quite often I've not heard of these. You can see there's a couple ADRs here. CDB. Now, see the difference here? The earlier signal with the DMI there, ADX breaking to the upside, great separation between the two directional indicators. Much better scenario there. Let's take a look at the moving averages and tiny bit overbought. This is a Brazilian company, I believe, Campagne, something like that. Up to 7, getting a touch vertical, but that looks like a Zig Zag. Take the moving averages off right there. Let's try this. Well, that's obviously not 100% correction, so I'm not sure what's happening there. But a little bit of a triangle, move back to the upside, so move higher up to 7. You know, I mean, we haven't really done one of these momentum searches with TradeFinder, so run through the other ones real quick. But maybe we'll just use that one as our symbol for this week and see what happens. So that's CBD. And then take a look at the other ones. Not too dissimilar a pattern. Actually, that looks maybe even better. So maybe that's what we'll do. We'll pick a couple of these and see how it shows up on the next couple of weeks. So let's do that. Let's look at so today 3:30. We'll look at 2 in the momentum search just to try something a little different. So BAK and CBD. We'll take this off. And it gives us a price target around 16. So a couple dollars out of a $14 stock is a pretty good move. All right, so those are our case study considerations for this week. With that said, got a few minutes left here in our allotted time. So if you have some symbols, if support is there, I'd be willing to look at a few symbols here before we wrap things up.
Hi, Rob. Yeah, there's a few symbols for you. We can start out with Brian asked if you could look at GLD and TGT.
GLD. I got a feeling it's not going to look a whole lot different than our GLD, but let's take a look at it. And then old Target, huh? We haven't looked at that one in a while. Well, actually, gold did move lower today, back down to that low. The last time it got there, that's when I did the event with Guy Adami. Was the last time it was down here, and we were talking about the fact that if it breaks this, it's falling off a cliff. We both agreed that if gold doesn't hold here, then it moves significantly lower. And man, there's a lot of financial people that are super bullish on gold. Well, that wasn't what they were looking for today. So there you go. If it doesn't hold this level right here, then things, I mean, it looks like a great downside trade at that point in time, that we turn and we head down here. There's that gap. Highlight this right there. That needs filled, a tiny one there. I mean, could gold go all the way back down there? Man, that would be hard to imagine with everything that's going on, liquidity-wise, fiscal stimulus, etc. I know the dollar plays into it, but wow. just when it looked like we were finding a lot of support right in this area, and that could be a head fake. Markets do that. We talk about that all the time. That's why we have a rule that you look for a follow through or confirmation day, because head fakes occur. They just do. And so we'll see if this move down today is just a head fake or a test to that low. We still could be testing that previous low, but we'll broke it through 160 again for the second time. And if we get follow through from there, then it's coming back down towards the 135, 140 area. So target. So there's target. And we're at recent highs here. Right there at the 200 level. And if we look at moving averages, little bit overbought right now, right at resistance, major price point at 200. That makes you a little bit nervous. DMI looks really good though. So if it breaks above this, it could really run. Because you go back and look, and we're in the clean air. We're driving in clean air. That's race car analogy that I use. If you're the guy leading out front, you're getting clean air that comes into the radiator. It helps the car run a little cooler. If you're back in the back of the pack, then you're getting all that exhaust, the hot air, makes the engine run hotter, all the stuff being kicked up from the tires, all that kind of stuff. That's dirty air. But clean air, there's very little resistance. So if it would be probably ideal to see target consolidate for another day or two, let that 10-day moving average really catch up, and then make a run at going for significant new highs. But the DMI looks like it could happen, and the ADX is still leaving plenty of room for that to run. All right, next.
Next, Pankaj would like to look at Roku.
Roku. So Roku is at a spot where it may find some support here. So we're at a wave 4 that's at 48%. It's had a rough time. It looked like it was going to hold back here. That looked like an area of support. That was actually almost that launch pad effect look. But it's also important to note that quite often with the launch pad effect, we usually look for upward blast offs, but they can break to the downside as well. But this isn't really, I guess that day was a bit of a blast downward, but not too significant of a blast off to the downside. But here we have this right here, and broken that support, is trying to find it again. If we can come back to the upside, we need to recover that 10-day moving average. The wave 4 at roughly 50% is interesting, because quite often significant moves get 50% corrective move. So we have that in our zigzags as well. So it's given it another shot. One could argue that it was a better area of support before, but it's trying again. So if the market were to calm down, perhaps we can try another run back to the upside there. You can see that there was low volume on that consolidation. I mean, everything looked good for a run higher there, but it didn't. It broke to the downside. So you can also note that, look at that drop in the 200-day moving average. That red line down there is the 200-day moving average. And you can see volume has just steadily moved lower. So all that accumulation that was going back out here, and that was more than institutions. That was retailers with the big spikes. So maybe they are hanging on, because it doesn't look like there's been heavy volume selling. So I don't know. Just looks like Roku needs to hold here. Now, just one further thought on this before we move to the next one. If it doesn't hold here, then it takes another leg down, and that next drop comes down here to 240. 250, 242, 240. So that's a pretty significant drop. So it needs to hold right here, get back above that 10-day moving average. Then it's going to have to contend with the resistance there at 340, which is where it was finding support before. So it's got its work cut out for it. Be tough to go long without seeing it break back above the 360 level. Close above there with some follow through. Pardon me, but you certainly have to be aware of the downside as well there. Next,
XLV.
XLV. Healthcare. Good sector to look at. That's another one of the areas that money could find its way into this year. Doesn't have a 5-wave Elliott wave pattern, but this would be a definite watch list position, because you can see that ADX is breaking to the upside. It's nowhere near 20 yet, but it is moving higher. There's separation, pardon me, at least for the moment, between the two directional indicators. Excuse me. So there's separation between the two directional indicators, and if the ADX continues to climb, that could make a real run higher. There's a little bit of that launch. That's more like the launch pad right there. This kind of sideways stuff with the very similar size volatility bars. But if you could get a conglomeration of breaking above these highs right there with the setup in the DMI, you could really have something there as far as a continued move to the upside. So there's the 10-day moving average. That's what it looks like. Do a couple more, and then we'll wrap things up for tonight.
Okay. Let's do DE and WU.
DE?
DE, yep.
Good old John Deere. And it's just been on a really nice run, obviously, as you can see. And in the 10-day moving average, and you can see we've consolidated here. And look at that. I mean, 3 days below it, 3 days above it. That's, man, that is support resistance right there. Definition of it. Trading below for 3 days, right back above it. Has some support there right at 360. So right there, we have our support. And man, what does the DMI look like on this? Oh, that's a shame, because, man, that looked like it was setting up really well. But the ADX is dropping awfully hard on just the 6 days of consolidation. I guess you could consider the previous 3 days as well from the high. But there's the decent look. Man, the ADX was getting up near 40, so that makes sense. It needed a rest. Now maybe the ADX sets up again. So at this point in time, it doesn't have much further to go. This bar here, with the open and close lower, just kind of exhausted that move right at 380. So if we could break and close above 380, you don't have to worry about the high of it. Then maybe the DMI forms up again. We'll see. But I think that one got to be at least careful of for the short term here. And then WU, is that the other one?
Correct.
Western Union. And do people still use Western Union with Venmo and PayPal and all those other things that are around? I guess, because it's had a climb to the upside. You can see this really sideways consolidation for the better part of March after breaking above a similar consolidation that occurred in February. So call this a stair step. So you had a consolidation, boom, break higher, and then another consolidation. So is this getting ready to take its next step up? That happens. So you see how it looks. It looks like stairs. So you would be looking for another leg to the upside if the confirming indicator, it's not horrible. I mean, the ADX is still decent. The positive directional indicator has come down, but that is going to happen when you go sideways that many days. It actually wouldn't have been surprising to see the positive directional indicator looking even worse than that. So maybe that one can find itself and move up. Just interesting from a fundamental standpoint. All right, one more.
Let's finish with UMC.
United Microelectronics. Well, it kind of goes with our theme of the lower dollar stocks, which is what we experimented with tonight for our TradeFinder. That 38.2% fib corrective level, right at an area of support. That all looks good. So this is where you would have wanted it to hold. It did. So again, that 38% corrective move. Let's look at, not a lot of support from the DMI right now. I mean, you would expect that with the sideways move, but I mean, you're not going to have a great DMI with a stock going sideways that much, but it would be great to see it set up. But here's the key right here is breaking above this resistance level. So the $9 level acted as resistance back in December and early January. January, we break above it. We test it. So we run higher into February. We come back to test it again. Quick failure there in early March. And now we've been back ping-ponging back and forth between 8 and 9 for the month of March. So it's pretty easy here. Get above 9, close above 9 with follow through. At least it is above the 10-day moving average. And then you're probably at least going to test the recent high up there at 11.5. So that would be a pretty nice move from 9 there till 11.5. So we'll see if it can break above that. But that's the key. Close above 9 with follow through, and then you probably get your second shot at 11.5. So thanks, everybody. I know that there's lots of other questions, and please understand we have limited time. I did spend a little more time talking about the market with the other things, and then also sharing what was going on with the Viacom trade. Spent a little extra time there because that one was a little bit different. So I want everybody to understand the thought process behind that and also give you the backing of why the stock fell the way it did. So I used up some of the question and answer time at the end. But please join us each week, and we'll do our best to get your question next week. And with that, have a wonderful week. Thanks for your attendance. Appreciate your time as always. Look forward to seeing you again next week. Take care, everybody.